The International Olympic Committee has the honor of announcing that the 22nd Olympic Winter Games in 2014 are awarded to the city of Sochi.
Russia's $51 billion investment for the 2014 Winter Olympics was not only directed towards building safe and highly advanced venues for the athletes and their families and enhancing transportation for urban infrastructure, but also to create a sustainable future for tourism in the Sochi region. Russia's vision was to create a brand they could capitalize on in the future in order to boost their economy and create a desirable tourist location. This was all called into question in the recent months when Russia decided to take military action against Ukraine. Now, these geopolitical events have turned the tables on a potentially successful future in Sochi. Previous Olympics have led to a significant increase in tourism and has proved to be extremely beneficial to the city's economy. London hosted the Summer Olympics in 2012, and tourism in Britain has never been stronger, and the industry is making a big contribution to the economic recovery. In fact, Britain welcomed more than one visitor every second in June, as the reputation built up during the 2012 Summer Olympic Games helped to attract a record number of tourists. The tourism agency published research in July of this year, suggesting that the hosting of the Olympic Games had an overall positive impact on Britain in terms of how overseas visitors viewed the countries. In 2002, the Winter Olympics were held in Salt Lake City, Utah. This city has built a powerful brand, and to this day, they have enjoyed a record number of tourists. Other than tourism, past Olympic venues have achieved great success with not letting their infrastructure go to waste. Venues like the Olympic Oval and the Olympic Park have gotten full use. Nearly every Winter Olympic sport holds a major competition in Salt Lake City area each year. But here, there is a larger purpose that is served during the extensive time that they are open to the public. Hosting youth sports, teaching people to skate, inspiring the next generation to pursue their Olympic dreams. When looking at these past two Olympic examples and observing their success in the years after the game, Danilo Meadows' model of the positive reinforcement feedback loop shows how the investment in the games and the creation of a brand can lead to a positive return of investments and a future growth of tourism in the host city. By investing this large sum of money in the games, Sochi's vision was to imitate the success of previous host cities with an increase in their tourism and a healthy economy for years to come.
Establishing the image of the host city of the Games in 2014, improving the quality of the urban environment, updating transport, and modernizing engineering and utilities infrastructure were all vital to Sochi's success. Investment in the development of urban infrastructure supporting the Games included the cost for developing transport and engineering infrastructure, the construction of health and social service facilities, tourism facilities, and housing projects. The total capital expenditure for related activities in 2008 through 2011 totaled slightly more than 600 billion rubles, or $20 billion US, exceeding the investment costs for the Olympic venues and their immediate infrastructure by almost 5.5 times. One of the most important developments for the Sochi Games was the enhancement of their transportation infrastructure. Approximately 800 miles of roads were paved, in addition to 102 new bridges built. The cost of this road infrastructure totaled 200 billion rubles, or $6.8 billion. New bus routes were also added, and 963 buses ran during the Games. Transportation hubs were added near the railroad stations and the airport. In order to accommodate the influx of people into Sochi during the Games and for future tourism, new runways and terminals were added to the Sochi airport. Before the construction of the airport, it could only hold 900 passengers, and it was expanded to 3,800 after completion. From 2009 to 2011, the length of the railways increased by 66.3 kilometers, mainly due to the construction of a second track to the airport Newly added trains that travel up to a speed of 100 miles per hour made only a 30-minute train ride from Sochi city center to the ski mountain. A new offshore sea terminal was also added a mile offshore to accommodate cruise ships and the influx of spectators. The ports can hold 4.5 thousand passengers a day and can hold up to 200 yachts at a time. Although Russia ended up spending $51 billion on the Olympic Games, the majority of this on improving infrastructure, they were able to create an efficient system to control the influx of people for the Games and also set themselves up for a successful future as a desirable tourist destination.
When creating the Olympic Games, it is important to establish the city as a brand the world will remember. Sochi created the city with this reasoning. The Sochi 2014 emblem maintains a dialogue between the past and future. Fusing various dimensions of Russian culture, the brand can promote several images of the vibrant country, a country rich in history, embarking on a successful future, a country open to opportunities and the passion to make dreams a reality, a country committed to equality and celebrates the large amount of its diversity. They had a vision to create the brand by using a strong vision they call the Russian diamond. These are effects they promote to let the world know what Russia is all about. The game's vision consists of 9 core elements or values. The Russian diamond consists of excellence, efficiency, integration, hospitality, unity, uniqueness, respect, legacy, and harmony. Why would a venue want to host the Olympics? It can help rebrand a city. The games have very little to do with the sports. The games are used to present the city and the host country in the best possible light to investors. For some cities and countries, the Olympics have marked the transition to being a world player. Tokyo in 1964, Seoul in 1988, and Beijing in 2008 are commonly cited. By funding the new infrastructure and capitalizing on the prime geographical location, Sochi hopes to become a major tourist destination. Whether you want to ski or go to the beach, Sochi offers an array of attractions and has become a world-renowned alpine climatic resort.
Since the start of Russia's slow-motion takeover of Crimea in March, its stock market has fallen sharply and the stability of the ruble has taken a massive hit. Directly in reaction to the Russian intervention in Ukraine, investors responded in a big way with the key Russian stock indexes tanking by over 10%. That amounts to almost $60 billion in stock value wiped out in the course of a day, more than Russia spent preparing for the entire Sochi Olympic Games. The ruble has lost 9% against the dollar in less than 3 months. That will make imports more expensive for average Russians. In a bid to support the currency, the central bank raised its main interest rate sharply last week from 5.5 to 7%, but that will hurt the economy too by making loans more expensive. Energy prices are poised for volatility given the important role Ukraine plays in transporting Russian natural gas to the European market. According to Commerzbank, Russia supplies 22% of the European Union's gas demand, using just 3 main routes into the region. With the world's largest proven natural gas reserves of 1,580 trillion cubic feet, Russia has come to be the dominant supplier of fossil fuels to the European Union. Clearly, there is a lot at stake by gaining control of Crimea. Economic sanctions against Russia will affect the tourism industry because of countries from the EU and USA not allowing people to visit. The sanctions will also affect the overall economy of Russia as a whole. The US has been applying asset freezes on several businessmen, as well as a Russian bank linked closely to Putin that provides them support. If Putin does not back down over Crimea, as most expect, those sanctions could expand further in the future. Russia's economy was already weak going to the crisis, expanding only 1.3% last year. For this year, forecasts for growth of about 2% have been written off altogether, with Putin's advisor Alexei Kudrin expecting no growth at all. Investors took out $35 billion out of Russia in January and February, about half as much as in the entire preceding year. The outflows could soar to $50 billion per quarter if sanctions get tougher, Kudrin has warned.
Sochi's vision to capitalize on the brand that they have created and to establish themselves as a desirable tourist location and to sustain a healthy economy has backfired due to the recent Crimean crisis. The geopolitical actions taken by the Russian government will create a negative reinforcing feedback loop, hindering their ability to capitalize on the massive investment and stalling Sochi's original goal to become a prominent world destination.